The Kenyan Monetary Policy Committee met today to review market developments and decided to keep its key lending rate at 9.5%, citing worries about the persistent balance of payments pressures due to a gaping current account deficit. For in-depth analysis, we are now joined by Kris Senanu, senior currency dealer at Kenya Commercial Bank. Kris, thanks for your time. Were you surprised that they kept rates unchanged? Kris, can you hear me?
Hi, I can hear you, but you have Kris Senanu, the MD for AccessKenya here, not the monetary policy gentleman yet.
Oh, okay. So we got our conversations mixed up. I'll talk to my producer about that. We're talking to the right Kris now. Kris, AccessKenya Group MD, thanks for your time. Sorry about that. I'd imagine you were surprised by me asking you about whether you were surprised by the fact that the central bank kept rates unchanged. But also, you're a business person. Were you surprised that they kept rates unchanged?
No, not at all. I think what we're telling the rest of the world and Africa is that elections, no elections, everything is stable here. We're moving forward. As you can see, I have a very big smile on my face because I'm sure you've noticed the markets are booming in Kenya. And as much as our shilling doesn't seem to be showing it, it's something that you're going to see the shilling strengthening in the next week or two.
Absolutely. Certainly good to hear from one on the ground who's operating and therefore has a greater feel of what's happening in Kenya on the ground after those elections. But congratulations to Kenyans and the Kenyan government for that election. Let's talk about your numbers. Certainly on the surface of it, those numbers looking very good indeed. 62%, as I said earlier, increase in pre-tax profit. At the same time, this was driven by an increase in the number of customers, plus 700. And now you're talking about 5,400 list lines, 9% increase in revenue. This is looking really like a good story.
Yes. I think one of the things, the last 3 years I've been here every year and a half year to give results, and 2010 has been the only year in our history of 12 years where we actually had a blimp in profits. Our profits have always grown from strength to strength. Last year we did 109 million. This year we're up to 162. And I mean, we expect that growth to continue because we've totally focused our strengths and energies on the corporate segment. Our story has now sunk. People understand the difference between getting broadband from a provider like us and getting broadband maybe from a voice or a mobile provider. And so everything is looking up, all the indicators, the key indicators, and we expect the same for 2013 and beyond.
Absolutely. So you put in a nice line that I wanted there because I wanted to say, can it be sustained? And you're saying you're expecting to do the same for 2013. Let's talk about those drivers for 2013. Yes.
So the key drivers, first of all, 2012, the first half of the year was very difficult because of high interest rates. And so that would have dampened some of our profits. But as the year progressed, obviously interest rates came down. The second thing is that our operating cash flows really increased. And so we're able to pay down debt, at the same time continue investing in the infrastructure, and still we're able to post the profits that we did. So if you then take that and say 2013, the interest rates will remain the same or go down again, we keep on making the same amount of cash and more, and we keep on investing in infrastructure, then obviously you expect not only the company to grow and be more profitable, but then our sustainability, because of our business strategy, has then been validified.
But Kris, at the same time, though, we do know that there are some pressures within the system. I mean, you speak about declining ARPU rates, so that's average revenue per user. That's under pressure. And then you're also talking about costs. Though I saw in this reporting period, you managed to bring down your gearing down to 49%. But there certainly are risks within that outlook, isn't there?
Yes, definitely. I mean, the business environment, we expect one, competitor activity, but secondly, also, basically, our operating environment could change because of competitors. However, having said that, I think the key thing to keep one's eye on is, are we in the right segment? Are we in the right industry? And are we doing the right things, executing the right strategy in order to grow?
I would imagine going forward, you're going to be taking a look at the numbers of, on tweets and SMSs and emails and stuff that took place during the elections. I'm hoping that we can discuss those in the next set of results when you look at it. But let's talk more also about opportunities, because we know IT has been a strong focus for the Kenyan market, and you guys are very strong within that segment. Going forward, though, what else are you expecting in terms of increasing that capacity that we have? We know fiber has been coming to many parts, and you've already done 400 kilometers of it.
Yes, so some of our key focus areas for 2013 and beyond is layering on IT services for existing clients and new clients. What this means is that we already have over 5,500 corporate links. Most of those organizations and companies need IT services. As you know, outsourcing and virtualization together with cloud services are the new things. Most organizations in Kenya, of course, are moving towards that. So we see a big opportunity for us stepping into IT. As you know, when we went public in 2007, we bought an IT wing, which we had to restructure in 2010. So far, we've now been able to change most of the revenues there from top-line heavy hardware sales to recurring revenue. And we've done that successfully. 2012, you'll see the results that we actually made some profits from the IT division.
Yeah.
We expect that to continue. We expect a massive focus on that. And you will see the results of our IT focus and the growth in the Kenyan market and economy because of that within the AccessKenya group.